Yeah.
Yeah.
So I guess, yeah. So you're an indication of what we're saying. You got a little thermometer here, okay? And you put the thermometer in, and it says, "I'm going to get a huge return off of this." Then you say, "Well, wait a minute. I'm getting that return for a reason. So reading that on the thermometer for a reason. It must mean that there's a bigger risk that's involved."
Absolutely.
And so, so you need to be aware of that. But in a sense, I mean, you give up a little bit too, because that person who's managing the property has to be compensated.
And you know what? Not only do they have to be compensated, they should be compensated well.
Mm-hmm.
The last thing you want is for somebody to be managing your property for you in a partnership and starve them or expect them to go get another job, because
Mm-hmm.
then they're not going to manage it to the level that you want them to manage it.
Mm-hmm.
So, you know, you are going to give up some of your profit for someone to do that, but you're trading money for time.
Right.
You know, we can never replace time. You can always replace money. So, you know, hire somebody to help you or partner with somebody to help you.
Mm-hmm. Okay. Okay. Well, here's the next one: as private lending. So, and actually, I think this is an interesting one.
Yes.
And in some ways, you can eliminate a lot of headaches. Can go in this direction. Why don't you talk
Yes.
about this for a few minutes?
You know, private lending right now is the hot topic. If you've got funds sitting somewhere that are underutilized, you can make a lot of money with very little effort. Now, you have to understand the risks, of course.
Mm-hmm.
But what we're talking about is loaning the money to somebody who's working in real estate, having your money secured against the real estate. Should they not pay you, you get the real estate, and you can have exits with that. But they will pay you great rates of return. On private money, you can maybe get 8% annually with a couple points up front. And as an investor, private money is usually based on relationships, so I'm not having to qualify personally or the property, and so I can buy properties that will give me better returns because it's properties that the banks won't finance. So I can get them at a lower price, sell them at the right price, and use private lending in between there.
Right. So just be aware that private lending is an interesting alternative. You can also have, you know, an equity kicker that's, in other words, equity sharing, if you will. In other words, after X period of time, this property is appraised, or if they sell the property, then I get a part of the profit. That can actually be considered to be interest. And actually, I favor private lending for the IRA or retirement plan type investing for that reason, because you don't have the special tax reporting requirements that applies for unrelated business taxable income.
Yes.
So, so it makes your life a lot easier, and then you don't have the management headache other than managing to be sure that you get paid regularly.
Yes.
And there may even be arrangements that you can set up for that, you know, where I believe you can make an arrangement that somebody's bank account is automatically debited each month and get those payments in.
So a real life example of private lending, what we do when we create turnkey investments, but we also offer hands-off management. And so we will sell our turnkey investment to an investor for 80% of today's value, and we retain 20%. And for that 20%, we manage it. So they get the cash flow every month remitted to their IRA, and then at the end of 5 years, we will sell that property, and they get 80% of the proceeds, and we get 20%. Hands off for them. They have experts managing it. It's, you know, growing their IRA money, and then they get an equity participation 5 years down the road.
Yeah. So, anyways, that's why we're doing this. Alternatives. Just there are different ways to go about this, and so you can find one that fits you. Because, you know, if you love getting your hands dirty, and you love maybe working with tools a little bit, you know, fixing and flipping may be for you, or even, you know, managing the people. You know, you like sort of being your own contractor, and so you hire the people to come in and do that work and oversee it. Some people just thrive on that. There are other people that hate it.
Yes.
So you have to sort of find what works for you. Okay, well, how about note brokering and buying? I guess that sort of is related to private lending, but it's sort of a little side area.
It's a little different. right now, financing for buying conventionally is difficult. And so there are people out there who have their homes paid off that are trying to sell their home. And they will sell or finance it to an end buyer. And so they'll just get a monthly payment, and maybe they're heading into retirement, and rather than those monthly payments, they want to get a lump sum. So they're looking for somebody to buy those monthly payments. And they'll contact a note broker, and there is an entire industry that buys those monthly payments. I mean, you've even seen them on commercials. And so they'll pay a discounted price to that couple that wants the lump sum. They get the lump sum, they go on with their life, and now the company that bought it gets the little payments, and they like it because that gives the return that they were looking for.
Right. Now, in some cases, you can actually buy the notes from banks.
Absolutely.
So they're having trouble collecting or whatever. You may be able to get it at a tremendous discount, and then you go out and you settle with the person who's making the payments on the loan, and somewhere in there you find some margin that you actually make some money. So
I just got a list from the bank today of non-performing assets, is what they're called, non-performing notes, NPNs. And it was about 14 properties, 20 cents on the loan value. Now you have to think to yourself, has the home value really dropped that much? Has it dropped that 80% that's missing there? No. But the bank does not want to deal with the homeowner, the foreclosure, that whole piece. And so if you know how to handle that, you have a great opportunity there.
So it boggles the imagination, doesn't it? Just all these things.
Well, and the sad part is the banks get recovery funds from the government, so they're not really losing that much.
Darn. I mean, darn, because it's coming out of our pockets as taxpayers.
I know. So get in the deal and make your money on one side.
Oh, gee.
Because they're taking it out the other.
Oh, my gosh. Okay, so just briefly, because we have a whole other interview that we recorded on this. You can find it at the website. It's financialinsiderweekly.com. Look under past episodes. But let's just talk very briefly about REOs, bank foreclosures. And so maybe you can just touch a couple of highlights related to this.
Sure. So, when the banks have properties that they can't sell on the main market, they're sending them out in bulk lists. And there's pension funds, hedge funds, and individuals that are buying everything that the bank sends out, which is good and bad, and I mean bad. We don't necessarily want to go in that direction as an investor. We want to buy it from the pensions or hedge funds, and they're allowing us to pick and choose. And you're buying properties 10 cents on the dollar, 25 cents on the dollar in most marketplaces, sometimes 50 cents depending on the marketplace. But you're getting houses in the price ranges as low as $15,000 in the Atlanta market for a house that can be rented at $700. So there's great opportunity to set up a business around buying the REOs.
Okay, so this is just another alternative, though. I mean, we've shown there's a range of things that you can do here, and I'm sure that there's more that we haven't really talked about.
There's like one other that I want to just talk about a little bit. Rental properties, you've got a tenant that lives there and they pay the rent, and when they're tired of your house, they move out, or if they're tired of paying rent, they stop paying, right?
Okay.
So one of the key things that I like to do is rent my properties with the option to buy it. You get a renter in there that has the mindset of being an owner, they're going to take care of the property differently. And I get them to pay a down payment up front in addition to their security deposit. So if they don't pay their rent, they forfeit that. So it's almost like a golden handcuff. I'm going to sell them the house at a discount. We negotiate the price today. And for that discount, they're going to give me a little bit of money up front. But that little bit of money up front keeps them paying on time every month without discounting, or forgetting to pay. And at the end, we both win. They get a house at a better price, and I had a renter, and now I have a sale. And so that's one of the hands-off management tools that we use.
Okay. Why don't you talk for a few minutes about due diligence relating to real estate investments?
Okay. There are many things that you should be looking at on properties when you're buying them, especially REOs, but any property to start with. You need to do a title search, and this is going to find out if there's any liens or claims to the property, such as IRS liens, bankruptcies, things that you should know about that were not completed properly. Because if you don't know this, somebody else might have a claim to your property. So that's the first thing. Secondly, you should have a property inspection so that you know the structural soundness and anything that might be hazardous in the house. Third, you need to do a lien search on your own for like water, garbage, taxes for the city schools and things like that that sometimes don't show up on title reports. And so it's really important to understand all aspects of the real estate transaction before you jump in.
How do you do that? How do you find out about liens on a property? And maybe it varies a little bit from state to state.
It absolutely varies from state to state, city to city. It's called a contact sport. It's like football, contact sport.
Okay.
Okay, so you're going to call the first person and you're going to ask them, maybe call the water department. I'm calling you to find out if there's any back water bills. Do they stay with the property or the person? If they stay with the property, you would ask them, are there any prior bills that maybe were sold, like tax liens, to somebody else? And then they'll refer you to another agency. And so you kind of play detective. Who do I talk to next by asking leading questions?
Now we're getting into a lot of work here.
It can be.
Yeah.
It can be.
Yeah. So, but the thing is that these are things that can come back and bite you. I mean, you may have thousands of dollars of water bills on a particular house, and that thing can come to you. You bought this place and you thought you were buying it clear because maybe you got on a foreclosure sale, whatever. Well, that settled the bank, but something else has come along with it that's sort of attached with the property.
We see it a lot, especially in the REO market, because things are moving so fast. I know of a person who owns a house in Pennsylvania. They called on the water and thought everything was clear, only to find out that there were water bills that were sold like tax liens in the tune of $9,000, and they cannot get the water turned on until they pay the $9,000.
Oh my gosh. And the property was what, like a $15,000 property?
The property was a $7,000 property.
$7,000, but now you've got $9,000 more that needs to be
Exactly.
paid. Ah. Okay, now, is this a good business to do as a Lone Ranger?
I hope that it's obvious by now that the answer to that is a big resounding no.
Uh-huh.
No, you need to have professionals around you. You need to have a tax professional. You need to have an attorney. You need to have other real estate investors around you so that you can bounce ideas off, ask questions, find out what you might be missing. It isn't what you know that hurts you, it's what you don't know that hurts you. And so you need to find ways to discover that.
Okay. Well, Lori, we're about out of time. We've done very well here today, I think, covering sort of the scope of things. Just an introduction, folks. But again, there are people like Lori that are around, real estate coaches that can help you get started in this area. And it can be a lucrative area to work in, but it's also one that's easy to really badly get burned, as you've just heard. So be aware, be alert, do that due diligence. We'll see you next time on Financial Insider Weekly.